Right now, the smartest, richest people on Earth are all doing the exact same thing at the exact same time. They're selling. Elon Musk, Sam Altman, every major AI company. And they're dressing it up as the opportunity of a lifetime. But if these companies really are the future, why are the people who know them best sprinting for the exit? The greatest technology boom in history is finally opening its doors. For decades, the best companies stayed private, growing in the dark, out of reach for ordinary people. But now, at last, the doors are being thrown open, and you get the chance to own a piece of the businesses that could define the next 100 years. But to others, this isn't a celebration at all. It's a trap. That's the side I'm on. And by the end of this video, I'm fairly confident you'll be on this side too. Because in the stock market, an open door is never a favor. Generosity is never just out of the kindness of someone's heart. Every trade needs a counterparty. Every buyer needs a seller. So if you're trying to buy stock, someone has to be willing to sell it to you. Which means, before you buy what they're selling, there's one simple question worth asking. Why are they selling? In an IPO, the people on the other side of the trade aren't random. They're the founders who built these companies, the early employees who gave them years of their lives, the venture capitalists who funded them when they were nothing. Nobody on earth understands these businesses better than they do, and they've seen the numbers you and I will never get to see. And they've looked at the most exciting companies of our lifetime, the ones everyone is desperate to own. And they made a decision. They'd rather have your cash than their own shares. This is what an IPO actually is. Strip away the headlines and the celebration, and it's a trade with massive information asymmetry. The sellers are the most informed people in the room, which means the buyer, by definition, is the least. And right now, that buyer is you. If these really are the most valuable, most important companies in the world, and the future is as bright as everyone keeps promising, then why are the people who know them best in such a hurry to sell them to you? There's an answer. It's a pattern that's repeated throughout the history of the stock market. It's shown up again and again, right before nearly every major financial bubble pops. I call it the dine and dash. Markets have tells. They don't come from headlines or earnings calls. They come from watching what people actually do with their money. The average investor sells when they get scared, when the news turns, when everyone around them is already running for the door. But the professionals do the exact opposite. As Benjamin Graham, the father of value investing and Warren Buffett's mentor, said, "The intelligent investor is a realist who sells to optimists and buys from pessimists. They sell when everything looks perfect. When the story's loudest, the optimism is highest, and there's a line of buyers out the door begging to get in, because that's the moment you can get the most money for the thing you're selling." Let's go back to June of 2007. Wall Street was booming. The two founders of Blackstone decided it was time to cash in. They took the company public and, between them, walked away with about $2.6 billion in cash. A little over a year later, the global financial crisis hit, the markets crashed, and Blackstone's stock plummeted roughly 90%. Or go back further, to the dot-com bubble. In 1999, the year before the crash, 51% of every company that went public that year came from a single sector, tech. Then the bubble popped. Over the next 2.5 years, the Nasdaq crashed more than 75%, and an estimated $5 trillion in market value simply evaporated. It took 15 years for the Nasdaq to recover. A study by the Kauffman Foundation found that 10 years after going public, only 29% of the emerging growth companies that listed between 1996 and 2000 were still standing as independent public companies. The rest were gone. And in 2021, this exact same pattern put on a different costume. It raised $160 billion in a single year, then collapsed almost overnight. That's coming in the next part of this video. But here's what should actually scare you. This isn't history. It's happening again, right now, in AI. And the numbers are worse than anything you just saw. So here's what I want you to do. If you actually want to see how this exact same pattern is playing out in AI right now, the real numbers, the real names, the real math nobody's talking about? Comment exit below. If enough of you do, part 2 goes live. Because once you see this pattern, you can't unsee it. And I don't think you're ready for what the AI numbers actually look like.